everybody to our 7-episode series of the boom and crash liquidity concepts. We are on episode 2 and we are going to cover top trendline liquidity. But before we do that, we hope you went through episode 1 where we introduced liquidity, the importance of liquidity, types of liquidity, and a psychological approach to trading boom and crash, which we named Outlook Twist. If you haven't, go check out episode 1. I will link on the top right. I'm going to link the video to episode 1 of this series. When we talk about top trendline liquidity, what exactly are we talking about? If you went through our Instagram page, you'll notice we did try to give an idea of what this is all about. But I am going to clarify that on this slide. So, trendline trading is a popular concept. It's a popular trading strategy. We know that classic trendline liquidity, we are taught that you are going to take trades as soon as the market touch base on this trend line, right? So, for example, over here, if we have the market touching the trend line once, twice, and when it comes back the third time, you are going to take a sell here. But the thing is, it's not a merely reliable strategy. It does work. We do not disregard that, but you need to understand something here, that there resides liquidity above phantom trendline theories. And of course, trend lines are a popular trading strategy, but the market tends to run over these trend lines, right? So being aware of this phenomenon, it's going to help you to recognize it before it happens, or even after it happens, right? So what's going to happen is we are going to cover this theory on all these instruments, all these boom and crash instruments in this order, right? So let's get to it. Our first instrument now, we're going to look at Crash 300. And it's important to know that we'll just be using 30 minutes chart so that we save time, but the concept applies on every time frame. So whatever you see on the 30 minutes, make sure to apply it on your 1 hour, 15 minutes, 4 hour daily. It's still fine. So let's jump into our first Crash 300 chart. So this is a Crash 300 30 minutes chart, and this movement happened in July, and this was July 1st, 2nd up to the 6th, right? So what happens is before you go into the series, I did emphasize that you need to go through boom and crash capitalizer, because what we do is we utilize price action concepts from the inner circle trader. So we have noted a few price action tools that you are going to utilize in order to look for trades, for entries, for exits in the marketplace, right? So what we're doing is we're just putting an icing on the topping and just introducing a new concept called top trendline liquidity. So having knowledge about boom and crash capitalizer and then watching this series is a plus for you. So this is Crash 300. So what happens is, remember, we have a classic top trendline liquidity, or we have classic trendline trading here. So what the market tends to do is, and it doesn't matter if it's a boom instrument or it's a crash instrument, because the market tends to seek for liquidity. So whether it spikes to the upside or it drops to the downside, it's still going to look for liquidity, right? So we had a trend line here. So our belief is there is somebody on this movement. When I talk about somebody, I'm talking about the big traders, the big banks. So what they do is For the most, this algorithm that generates this random numbers, it believes that there is a stop, somebody who's in this cell, right? So let's assume there is a trader who's in this cell. So what they do is, if somebody's trading this down movement, obviously they're gonna place their stop losses above old highs, right? So we have an old high here, we have an old high here, we have another one here, we have all these old highs. So what we want to see is, we want to see if the market is going to run over these old highs in order to grab for this liquidity, right? So that's what's going to happen. But before that happened, remember, we had this old lows. We identified this old lows here, right? So what the market did is they formed this old low, then they went to the upside. And when they went to the upside, they found resistance on some level, and then they dropped to the downside. When they dropped to the downside, they found support on some level. And when they found support on that level, they formed a bullish order block. This is the 30 minutes bullish order block. Remember, M30 stands for 30 minutes, and then plus stands for bullish, and then OB stands for order block. We did teach you on these annotations in Boom and Crash Capitalizer. Check out episode 2. So let's see the outcome. So what price did is they did form that 30 minutes order block, and then the market went up. Remember, the order block is the last down close candle before the upward movement. So this was the last down close candle, and then we had the upward movement. So price will come back for this level. So they did come back on the high of this candle, this bullish order block. So they did touch that, and they spiked to the upside radically. So what they did is, when they were spiking to the upside, they kept reaching for this old high here, and then they went to the upside, they reached for this one here, and then they reached for this one also with this movement, and they reached for the last high with this movement. So this is what happens when price reaches for top trend line liquidity. Now I'm going to demonstrate with another example of the crash 300. So we have example 2 here. So what price did is, they were going to the upside, right? Then they dropped to the downside, and they broke out this old low, reaching for liquidity. We are going to talk about liquidity below and above old highs. So what they did is, they reached for liquidity below an old low, right? And they dropped into this price action 2 here. We identified as the M30 bullish order block. So as soon as they come here, our eyes automatically turns to this trend line liquidity here, right? So we want to see if price is going to go to the upside to run over this or these stops, and that's what happened. So as soon as price reached this bullish order block, they reacted nicely to it and went to the upside. And when they went to the upside, they were reaching for these liquidity trend lines, or this top trend line liquidity. So with all this movement, that's what happened here. Then they dropped and continued to go to the upside. But we don't care about the rest of these movement. All we care about is, we wanted to see if this top trend line liquidity will be covered by price, and that's what happened. Let's jump to another example. So we had crash forming trend line here. We had this top here, we had another top here. So the expectation now is price should come and react on this as we extend the trend line to the downside, and when price comes up to this trend line, they are going to drop to the downside. But that's not how we think. We want to see if price is going to come back or return into this M30 bullish order block after taking out this old low, which was a shift in market structure, right? So when they do that, they're shifting the market structure to bullishness. So what happens now is, we want to see what's going to happen. So let's get to it. it happened as we expected. So price did go up and then came back to retest on this last down close candle. So what we do is we extend this chart to the right, and then price did reach for that, and they went to the upside, reach for this old high here, took it out. Then we had another old high here, reached for it, took it out, and then we had this old high also, they took them out. So that's how you trade crash 300. Let's look at the crash 500. This is our first C5 chart. So what happens here is we have this two trend line, two highs, right? Forming this top trend line liquidity. So what the market did is they dropped to the downside, and when they dropped to the downside, we had this lows, equal lows being taken out. There's two equal lows. We are going to touch on equal lows and equal highs liquidity. So they took them out, right? So what price did is that after taking out this, we had this last down close candle being formed. So our assumption is we want to see if price is going to go to the upside and then return back to this M30 order block. And when they do that, our eyes go straight up to this trend line. For what? For liquidity. So that's what happened. So price did in fact go to the upside, but before they even returned to this order block, they went and ran over our top trend line liquidity, but they did return back after some time and continue to the upside. So that's what happened. Let's look at the second chart. So we had this chart here. This was on the 26th of June. This was on the 26th, 28th of June. So C5 was dropping, continuously dropping, and when they were dropping, they formed a liquidity, top trend line liquidity here. So what we do, we would want to see if price is gonna break out some lows, and that's what happened here. And then we look for some price action to like an order block. So we did get to this bullish order block here, and we want to see if they're gonna go to the upside and run over these stops. So that's what happened here. They did touch here and then they return back. So when they retrace to some level, and this, when I look at this right here, this is a mitigation block. So a mitigation block is a failed higher low. So if it went below this low here, it could have been a breaker, right? But we consider this a mitigation since it failed to go lower than this old low. So price did come and touch on this mitigation block and went to the upside and reached for all these trend line liquidity. So that's what happened here. Let's look at the last chart. We had this highs, or this trend lines being formed. This trend line high is being formed. So procedure, we look for old lows to be broken. We had this old lows, this equal lows being broken, and then we want to see if price is going to come back to some order block, right? So let's see what's going to happen. Price did come back into this old order block, and we reached one twice and push to the upside. We did have a consolidation here, but they did spike to the upside after that. So they reached up until this level here. So that's how you'd look for top trend line liquidity on C500. Now we are looking at C1000. So crash 1000, that's our first chart. So we had, before price went to the downside, we had an old high being formed here. So we consider this an old high because price continuously or rigorously dropped to the downside. So when they did that, we now want to see if price is going to reach for liquidity. Remember, we did communicate that above old highs and above or below old lows, there resides liquidity, right? That's episode 3 of the Boom and Crash Capitalizer. Check it out here. So remember, we want to see if an old low is broken. we had that here. Price did break an old low. So what we want to see, we want to see if they're going to continue to the upside after breaking this old low. So that's what happened here. Immediately they broke out this old low, they continue to spike to the upside. So that's what happened with Crash 1000. And let's look at the second chart. So we had price dropping to the downside on Crash, and they formed this trendline liquidity or trendline phantom. So we had this old low being broken, there's two equal lows, and then we had another old low being broken. So this demonstrates, if price takes out old lows and old highs, it's just demonstrating that they are taking out liquidity to reverse. So this is a reverse movement. So what they did is they took out these two old lows, then let's see what happens. They went to the upside, and when they were going to the upside, they did reach for our target. So these were our targets. So they did reach into that. So they continue to the upside, but we don't care about this, the rest of this movement. We just want to see if this theory works, right? So let's look at the last chart of the C1000. So when you look at this chart, you see we have this old high, and then with this old high. So when you join them together using a trend line, we do get a trend line theory, or we do get a trend line suggestive concept or strategy, right? So the expectation is when price now comes back to the upside, they're gonna drop to the downside. So we do not want to see that happening. What we want to see is, we want to see if an old low is going to be broken. And when an old low gets broken, we want to see if they're going to reach to the upside. Plus, oh, this is interesting. We have a fair value gap here. So we want to see if they're going to reach down, or they're going to reach up to this, into these trend lines, plus fill up our fair value valuation. So that's what happened here. They broke down this old loss, and then went to the upside, then retraced. When they retraced, you join these three candles, they form a bullish order block, 1, 2, 3, right? So price did reach into 50% of that. Use a Fibonacci to extend to your right, and price did reach into 50% of that. Then they went to the upside, reached into this old high. Now we want to see if they're going to reach here. They reached here. We want to see if they're going to reach here, and they did that. So we're going to see if they're going to fill up our fair value gap. So they did touch on the low of this fair value gap. So it's calling price, right? So that's how you could have traded Crash 1000. BCC Mentorship is available. We're taking beginner traders and teach them price action tools that will enable them to become better traders, because we're going to do predictions on our private Discord group. So if you have any interest on increasing your knowledge, hit us up. Now we're going to jump into the boom instruments. So what we're going to do is we're going to cover boom 300, 500, and 1000. So we had this boom 300 chart. So boom 300, we have these old highs, there's old highs, right? There's consecutive old highs. So what happens is, we know that they form a trend line theory. So we want to see if price is going to break down an old low, or old lows or equal lows. And that's what happened here with this consistent down movement. Price did form a bullish order block. Remember the last down close candle, that's our bullish order block, right? So when price did that, they did go to the upside and return back into our bullish order block. Then they went to the upside, reached into this liquidity on this top trend line, then dropped to the downside. And when they dropped to the downside, this is supposed to be a PB standing for propulsion block, because a propulsion block, remember, is the candle that is the last down close candle after the market has tested a bullish order block. So this last down close candle that pushed the market down into the bullish order block. So Price did reach into that here, 3 times, 4 times, 5 times, and they went to the upside and reached into our top trend line liquidity. Now let's look at the second chart. So we had this two old highs forming a trend line. Right? In theory, it's said or it's advised that when the market, you extend your trend line right down to the down right, and then when the market goes or spikes to the upside and touches that trend line, you look for sales. But no, we want to see if price is going to go to the upside to take out this trend line liquidity on the top side. So that's what happened here. But what's going to drive the market to the upside is we had this old low being taken out here, and then we had this last down close candle being formed. It dropped into that, and then we had another one here, which is another bullish order block. So we want to see if price is going to test those and continue to the upside. So that's what happened here. Price went up and then returned back into an M30 bullish order block, then spiked to the upside, and when they spiked to the upside, they reached into our top trend line liquidity. Now let's look at the last chart of the Boom 300. So we had this old high being formed here, and then what we do is when price does this, we want to see if it's going to reach into that at a later stage. So what happened is they dropped to the downside, forming this top trend line liquidity. And when they did that, we had this old low here. We had an old low here being formed on the 31st or the 1st, on the 1st of June, right? And we had a market running over this old low, but when it ran over this old low, we ran into a bullish order block. This is one of those perfect setups that you will get in the marketplace, right? So a setup like this is like Candyland. So what happens is we want to see if they're gonna utilize this bullish order block to spike to the upside and reach into this top trend line liquidity, and hopefully reach into our target here, our old high. So let's see if that happened on the 1st of June. So we did get that. We had price drop into the order block, right? Then first, second time, and went straight up into our top trend line liquidity, target 1, and then into our old high, target 2. So that's was sweet to watch. So that's how you could have traded Boom 300. Now let's jump into the Boom 500 chart. So that's our first chart, first of 3. So what we did is, or what price did is, price was dropping to the downside, has been continuously dropping, and this chart was found on the 9th of June. So what price did is, it dropped to the downside, but when it dropped to the downside, looks like it was aiming for this fair value gap here after taking out these 2 equal lows. So also after taking out these 2 equal lows, so price did react on this. But now that we're looking for top trend line liquidity, we want to see if price is going to utilize this M30 fair value gap to go to the upside. And when you talk about the upside, this is our trend line liquidity. We want to see if price is going to reach for that, right? So price did that. We did utilize this fair value gap, also this bullish order block, the last down close candle. Price retested this and went to the upside. And when they went to the upside, we took out old highs along the way, right? So we did take out old highs, and we continuously took out this trend line liquidity, and it failed after that, or it dropped to the downside, but we don't care about this other movement. Now let's look at our second chart. So we had price here going to the upside, and then Oh, we had price going to the upside, but when it was going to the upside, we had this order block here, M30 order block being formed, and price did utilize that, but we don't care about this one for now. It went to the upside, it reached into some level, looks like it reached into this bearish order block, the last up close candle, and it dropped to the downside. So as it was dropping to the downside, we formed a trend line theory here. So this now means this becomes our top trend line liquidity. But for us to know when price might reach for this liquidity, we want to see if old lows are going to be reached by price, and price did that. But when it reached into these old lows, it needed some level to find resistance, to find support on, and we visited this old M30 bullish order block, and when we did that, price did react beautifully, and when it reacted, it formed this propulsion block here, the last down close candle before price or after price reaches into a bullish order block. So we want to see if price is going to return to this level and continuously go to the upside. So we did get that. Price did remember this propulsion block, came to test it, and went to the upside. And as it was going to the upside, we were reaching into this top trend line liquidity, right? So we did reach into this liquidity and also took out this old high here. Now let's look at the last chart. So we had this chart was on the 14th of June. So we had price, was it June? Okay, I'm not sure about the date here. So we had price going to the upside, spiking to the upside, and then reacting to some level, and then drop to the downside. As it was dropping to the downside, we were taking out old lows, right? So what happened now is we had this old low being taken out, and then we had this last down close candle being formed, which makes our bullish order block. So our eyes now turns to this top trend line liquidity. So we want to see if price is going to reach for that, and it did reach for that. They spiked after reacting to this bullish order block. They spiked continuously to the upside and reached into the rest of this top trend line liquidity. So this is just a good demonstration of why it's essential to trade utilizing liquidity concepts. So that's how you would trade Crash 500. Oh, sorry, Boom 500. Our first Boom 1000 chart. So on Boom 1000, we had price going to the upside or spiking to the upside and then came back down. But when they were spiking to the upside, they made this fair value gap, right? So we did utilize the top of this fair value gap to go to the upside, but we don't care about that for now, right? So when price now returned or dropped to the downside, we had this top trendline liquidity being formed. And when price made this top trendline liquidity, it dropped into an old fair value gap, right, into an old ICT fair value gap, and then they did broke down old lows in the process. So you want to see if this is going to push or spike price to the upside. So that's happened, and when it happened, we did reach into this top trend line liquidity, and then we took out this old high, then dropped and consolidated. We don't care about the rest of this movement. All we wanted to see was price going to reach into this top trend line liquidity, and look at the movement. It just shows you there's something behind top trend line liquidity, or there's just something about trend lines. Why would price spike to the upside and immediately after doing that they just dropped and neutralized and just consolidated? So I mean, it's something for you to test on your side. So we have this up movement. Before the movement, we had this old low, and then we went to the upside, formed an old top trend line liquidity, and price did reach into this old low here, and then we went to the upside and then dropped. So when they dropped, they took out this old low. So what we want to see is, will price be able to go to the upside? And when it goes to the upside, will it reach for this top trend line liquidity? And this is what happened here. Price did reach into this old low, went to the upside, and spiked to the upside to fill up this trend line, or to reach into this top trend line liquidity. Let's look at the last chart. We had price forming old high, right? So this is a trend line phantom theory. So expectation is when we form another high, yeah, it's gonna drop to the downside, but no. So what we happen now is we had this old low being taken out here. So this was a shift in market structure, and when they did that, we formed this last down close candle. This is our bullish order block, right? So when price did that, we want to see if they're going to utilize the bullish order block to go to the upside, and this is what happened. That what's happened here. And then when they reached into this bullish order block, they went to the upside, and they returned back into a propulsion block. You need to know what a propulsion block is. So they did reach into that and then spiked heavily with these long candles to the upside. It just shows you that there is something they're trying to reach for. This is why they would maneuver with such volume or with such movement, right? So that's what happened here. They did reach into all of this liquidity. So that's how you could have traded a Boom 1000 chart. That's all. Our next episode, we'll be talking about bottom trend line liquidity. So see you on the next episode. Make sure to subscribe, like, and share this video.